Ex-US President Ronald Reagan once claimed that inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman. Today we explore the hidden and much misunderstood true goal of inflation. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy. So please do consider subscribing. Of course, there is a huge debate going on as to whether we are in the midst of a deflationary or inflationary phase, with some of the best minds in finance on either side of the argument. But if we actually break this argument down and the substantial weaknesses within our inflation measurements, I think we can identify that we're seeing both inflation and deflation. Deflation among consumer discretionary products that benefit from improvements in productivity and manufacturing, together with the looming threat of a deflationary asset bust. At the same time, I see inflation among necessity items. We can see just that in this excellent chart from Dan Oliver. Moreover, this graphic also highlights the growth in prices of those goods which we need to sustain ourselves. And this is important. Remember that the Arab Spring uprising in 2010-2011 occurred after a sustained period of quantitative easing, where inflation reared its head in food prices, which had a profound effect on the developing world. We're all aware of one of the key inflation goals as far as the government goes, and that is, of course, to actually enable the reduction in the real size of our national debts. This is the inflation tax, which is enormously effective for debtors. This inflation then creates enormous socio-political consequences. For normal households, the impacts are often severe. Wages may be adjusted annually, but the increases will only take place after the inflationary period has persisted. In addition, those necessity items, particularly food, represent a high proportion of overall income for the poorest in society. This reduces overall disposable income for these groups. Meanwhile, any income increases may result in fiscal drag, where you find yourself dragged into a higher marginal rate of taxation. Meanwhile, the twin combination of modest inflation and low interest rates dissuades people from saving, and any real financial discipline is greatly undermined. The threat of deflation also poses other problems. For instance, if wages were to deflate, the impact upon tax revenues would be absolutely severe. So if wages inflate, then it means tax takes increase, of course. And so inflation has tended to either make people rich or poor. Rich for those that own assets, and poor for those who are asset poor. Indeed, this chart shows us the fruits of financialization, where the grey line illustrates that those enjoying the greatest gains in income in 1980 were in the lowest 10% of income earners. Contrast that with this red line, which highlights income growth across the spectrum in 2014. Here we can see the colossal change that has taken place. And to reinforce this point, this chart illustrates to us that in America, the top 0.1% own more than the bottom 80%. After all, if you're extremely rich, you can buy the very best advice on how to manage your wealth against the threat of inflation. Yet the state is financed by inflationary policy of ever-expanding money supply and fiscal deficits. Amidst the borrow and spend orgy, national debts will continue to soar, while increased money supply will see household purchasing power plunge ever lower as the price of necessity items escalates. In the face of higher inflation, agitators seem likely to succeed in making others believe the fault lies at the feet of capitalism. They'll say free markets are bad and the state is good. They'll allege that capitalism leads to booms and busts and crises, and the state offers solutions and a better world. Militant Marxism will be called for to topple capitalism, and the revolution will begin. If only everyone understood why we must disaggregate credit to actually reap sustainable growth. Given the banking sector creates 97% of new credit, our central banks as regulators can determine where this credit flows. It can flow towards facilitating deflationary purposes, which enable businesses to enhance productivity and offer lower prices. Or it can flow towards fueling inflationary boom-bust economics for consumption, or via fueling asset prices in real estate and stock markets, which reinforces inequality. Additionally, inflation also alters our time preferences, and consumers understand that prices rise over time, and this encourages consumption in the present over the future, aided and abetted by negative real interest rates. But of course, these things are never taught or communicated in the mainstream media. But do the Marxists have sufficient numbers to enable their revolution? There's certainly plenty of support among the fields of education, law and order, transportation, and increasingly in the political sphere. And this leads us on to a far more sinister motive that our central banks and governments have for inflation. It is to lead those in the lower wealth percentiles towards the siren song of modern monetary theory, universal basic incomes and bank accounts with our central banks, also known as CBDCs. In the face of price inflation or even collapsing retail banks, deposits digital dollars at the trap set to drive us towards the neo-Marxist nirvana. A trap whose jaws will close tight, one which will place even greater power and responsibility in the hands of our central banks. In fact, every crisis has seen the power and responsibility of these unelected, secretive organisations expand considerably. And of course, central banking and the state monopoly of credit are key tenets of the Communist Manifesto. The longer-term average inflation targeting that the Fed will now use simply helps to accelerate this process. While the official rate may stay low initially, this is very soon likely to change. When it does, the notion of the World Economic Forum's Great Reset will be ready and waiting. This is a neo-Marxist philosophy which will reinforce the power of the state amidst a dystopian new world order. Thus, inflation reinforces a wealth transfer from savers to debtors. This is the key goal of inflation, a wealth transfer which distorts the reality of capitalism and facilitates regime change, or the Great Reset. We must protect our wealth with gold, silver and certain crypto assets while educating others on what is taking place. What do you think? Do let me know in the comments below. Thanks so much for watching. Do consider subscribing and check out these other videos. And I look forward to seeing you next time. Bye bye.